Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com tells us an unexpected boost in U.S. employment helped keep the American stock markets happy. He takes a look at the U.S. dollar, bonds, and crude. The publisher of the Gloom, Boom, and Doom report, Dr. Marc Faber, talks to us from Thailand. He looks at looming government debt, the markets in the new year, and how the U.S. and Canadian dollars might fare in 2020. InsideTrackTrading.com President Eric Haddock looks at how various cycles are affecting the prices of gold, silver, crude, and Bitcoin. Plus, at the end of the show, we'll have company showcase updates from American Manganese CTO Zarko Meseldzija and Cypress Development's Don Mosher. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Always good to be with you, Jim.
And Ross, do you still have your year-end special?
We do. $60. We'll get you every one of our research reports from now through the end of the year. And this is the time of year where things do get interesting. So people might want to take a second and think about signing up.
The U.S. gained 266,000 jobs. Canada lost 71,000. How did that affect the markets?
Talk about two divergent markets. And even when you allow for the GM workers coming back, 40,000 plus of them, that still was an exceptionally good number on the U.S. side of the equation. So, with that, you end up with the strength in the U.S. dollar. Bond market comes no longer it becomes much more hawkish as far as the Fed is concerned. So, bond market is down. With the strength in the dollar, the gold market down $16. And, it's stock market strong as far as the U.S. is concerned. Big day there. Not up to new highs, but the trend is still up, and we are in that seasonal period where from the basically 15th of the month on, you'd be looking for some strength. The optimum entry points are if you get a small correction, that sets up it could be a 1 or 2 day one, a bit of a clean out that sets up a really good entry point for the long side, taking us into January.
Gold, why is it down?
Well, gold was really nicely oversold here about 4 weeks ago, and we looked for it to come back and test some resistance levels above us in that 1485 to 1495 range. There were some moving averages up there. It was the midpoint of the last failed rally. We had a summer rally from 1465 to 15 and a quarter. And usually the midpoint of a failed rally is an overhead resistance. So 1495 was going to be a good spot for that. We've got short-term oscillators that went overbought on the first bounce here about 10 days ago, and then again on Thursday, Friday. There was, lots of reason for gold to have some trouble. And from a seasonal perspective, you tend to see, at least since 2007, we've been seeing November, December lows. But you really want to have a nice hard break into those lows. And if we look back prior to 2007, it's not uncommon for the lows to not be generated until January. So we hit some decent resistance levels here, just around 1490. Still of the mindset that the best thing that could happen is that there's a big clean out as far as the open interest is concerned with the speculative long positions. They were up again this week. We'd like to see those drop. We'd like to see them drop enough that they get back to creating neutral readings on our relative strength index. That's what we're going to be watching for. Probably going to take a gold price maybe in the 1405 to 1440 range before that happens, but that would just be exceptional as far as our big model that we're looking at on the gold market, which is for basically a retest of the highs in the next couple of years. So a clean out would be very, very nice to see at this point.
Has OPEC cut production in hopes of boosting prices for oil?
Nope. Oh, yeah. I mean, it's 500,000 barrels a day that there is the goal here to be dropping production. So that'll take them to 1.7 million reduction overall. But you always have to be cautious with OPEC. What they say and what they do can be two different things. The price did get a boost out of the meeting. We're up through $59 as of right now. This is fitting in with our 10-year cycle, where the ninth year of the decade tends to see strength in the fourth quarter of the year, carrying you up into an overbought level. We still working towards a $62 target. If we get overbought before then, we'll take advantage of a sell signal. But for now, this market is just moving steadily, methodically higher. It gets a hit for 1 or 2 days and then comes back to marginally higher highs, and it's been doing that since the 1st of October. That's very nice. If it wants to go a little more exponential and have multiple days to the upside, that would give us the overbought signal that we'll be looking for an interim high. Now, in the meantime, the oil stocks, the XLE, the XOP, and in Canada, the XEG, the ETFs for the oil stocks in the sector are showing nice buoyancy here the last week or so relative to the August and October lows. So look for seasonal pressure and tax selling pressure to come off of these right now and get a pretty good pop as far as the group is concerned.
Ross, thank you so much for chatting with us.
Always nice to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Dr. Marc Faber next on This Week in Money.
Always consult your investment professional before making any investment decision.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Dr. Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report, which you can find online at gloomboomdoom.com. He's speaking to us from Chiang Mai, Thailand. Welcome back to the show, Marc. Marc, are you bullish or bearish on the U.S. markets going into the new year?
I think the U.S. market today is similar to what it was in 98 to year 2000. You have a group of stocks that has driven the index higher. This is a very narrow group of stocks, but nevertheless, they have driven the index higher. They are mostly large market cap stocks. And then you have depressed sectors in the market, the so-called value stocks. Banks are relatively depressed compared to the S&P. Then metals and mining companies and oil stocks and oil servicing companies and food companies, utilities. So these stocks relative to the index are somewhat inexpensive. And I think the continuation of the bull market, if you want to say so, would have to depend on these stocks starting to behave better, to start to move up and push the index higher. in year 2000, this didn't happen right away. The value stocks, they bottomed out probably around 99, 2000. But as the leaders, the Nasdaq was going down. In other words, actually it wasn't going down, it was collapsing until 2002, 2003. During that period of time of the old leaders going down, the new leaders didn't perform well. They didn't go down, but they didn't perform well. So in other words, the leading sector after 2002 were essentially commodity-related stocks, oil, and especially mining companies. It took until the low of the bear market for them to really take off. And I think this is the danger in the market today, that when the indices will go down, that everything will go down, some more than others. And so I think we have to, we have had this process of indexing, as you well know. I think we're moving into an era where stock selection will be very important. You could be in the right stock, as an example this year, if you were in Kirkland Gold, you did very well. Some other gold shares and silver companies didn't do so well.
What do you see ahead for gold in the new year?
And coming back to the stock market, I think we also had this underperformance of European markets and emerging markets since 2015. I think if you're bullish about stocks, I think you're better off by buying European and Asian stocks that are relatively depressed compared to the S&P. I also like to say a big consideration will be the US dollar, the exchange rate. I think the dollar will go down, and that will benefit also foreign markets, which leads me to answer your second question about gold. I think if the dollar weakens, people will ask themselves, well, what is a desirable currency? And I can only see three desirable currencies, gold, silver, and platinum. The others are probably better than the dollar, but not that much better. And because of this relatively positive view about gold, silver, and platinum, I'm also relatively positive about Canada, the Canadian dollar.
Have gold and silver been hitting new highs in currencies other than the US dollar?
Yes, of course, in some cases, huge new highs. If you have a currency like the Chilean peso collapsing or the Argentine peso collapsing, then obviously against these currencies, gold is going up strongly. But there are also currencies that were strong against the US dollar, with all the controversy about Ukraine, which is basically a cesspool of corruption. But it fits very well into Washington. It matches the corruption of Washington. The Ukraine hryvnia was a very strong currency. It's up 15% this year. The Russian ruble is up 8%. The Thai baht is up 7%, and so forth. So there are currencies that actually went up against the US dollar.
How is crude looking heading into the new year?
This is very difficult to tell because so much of it depends on geopolitical developments. I'm long some oil companies, mostly in Europe, and I'm long some oil servicing companies, such as Schlumberger, but I don't think the oils will rally a lot for the simple reason that these environmentalists are strongly opposed to fossil fuel. And actually oil companies and gas companies could get sued the way the tobacco industry was sued a few years back. And that may keep stocks under pressure.
Is the U.S. economy continuing to project a strong U.S. dollar?
I'd like to answer this question the following way. Over the last 12 months, nominal GDP increased by approximately $750 billion. The government debt increased by $1.303 trillion. This is only the government debt. We're not talking about consumer debt. We're not talking about corporate debt and so forth. In other words, the government spends $1.3 trillion more than they get in terms of tax revenues. And this is only the federal government. And the economy only grows by 750 billion. In my book, this is not a healthy situation. And I think because of this and other reasons, the dollar in the long term is doomed. But as I said, we don't know exactly against which currency. My bet would be to say it's doomed against gold, silver, and platinum.
This week, the Bank of Canada maintained its interest rate at 1.75%. Is this a good or bad sign for the Canadian economy?
I think the Canadian economy is still suffering from a debt binge, with household debt in Canada being one of the highest in the world in terms of GDP. And because of this very high debt to GDP, this high household debt to GDP, I think that the economy at very best will grow very slowly. But in some sectors, we may already be in a recession.
You mentioned the Canadian dollar might do well. How come?
I think that the price level in Canada is relatively attractive compared to the price level in the U.S. And I think this maybe Americans don't realize, but I have so many friends everywhere in the world. They all tell me, look, Mark, if we don't have to go to America, we will never go back again. We will never go there. I think the politics of the U.S. in terms of this exceptionalism and in terms of invasions of the Middle East and in terms of the Trump policies have really damaged the U.S. in global standing. And there are some retailers that reported sales over Thanksgiving, and these retailers actually pointed out that an area of weakness was actually spending by tourists, by foreigners, that this was missing. And I believe that this will have an impact also on immigration. I think a lot of people, if they will think about going elsewhere, they will think first of Australia, New Zealand, Canada, then the U.S.
We're hearing rumblings of a possible severe recession headed Canada's way. Your thoughts on that?
Yes, I'm sure that when the next recession hits, it could be severe and long-lasting. The question is, what will asset markets do? Because, as you know, we had some tightness in the repo market since August. And this can happen even in a money printing environment. Once you stop money printing, then these kind of periods of illiquidity occur. What was the reaction of the Fed? They immediately stepped into the market, and since August, the balance sheet of the Fed has increased by 40% of what it was reduced since 2000, and I think they started the quantitative tightening in 2017. So the injection of liquidity have been meaningful, and if they continue to inject this liquidity, and I think they have to, then all the quantitative tightening of the last 2-3 years will be offset in less than, say, 6 months. And so you could have a recession, and at the same time dollar weakness, and at the same time, because of this money printing, asset markets may not perform all that badly. I suppose that the bond market would be hit or not perform as well. But maybe stocks wouldn't go down a lot, but the dollar would go down. And as I said, I believe if the dollar goes down, it will be mostly against gold, silver, and platinum.
Is money printing picking up or slowing down around the world?
It slowed down, but I think it will pick up again once the global economy goes again, or once the economies deteriorate further. We had some deterioration already. In Europe, we're not growing. In Asia, many countries are in recession. In Latin America, some countries are in recession, and others are growing very slowly. So I think if the situation worsens, they'll print again. And they'll combine the money printing with some sort of modern monetary theory that would involve essentially handouts. In other words, you would send to each family $1,000 a month or more, or that sort of fiscal expenditures.
As money printing increases, are banks able to funnel where the new money goes? For example, banks get cold feet on real estate. They curtail lending for real estate. Do they then lend more liberally in other areas?
That may not be the case, but as I just explained, the government can hand out money. That's the idea of the modern monetary theory. And that money they can send to each household. It could also take a form of tax reductions, but most likely it will take the form, maybe not immediately. You need a left-wing or left-leaning government that then distributes money to people. And this distribution can happen in many different ways. You can send a check to each family, or you can send a check to each person, or you could send like food stamps or some form of subsidy. But I think it will be done in the form of the government sending money to households and individuals. And that money that is then sent to these people creates a deficit, which is then financed by the central bank. So it's a combination of fiscal measure financed by monetary policy.
What's the latest on real estate markets around the world?
Well, that varies greatly. There are places in Europe which are essentially free of charge. You can acquire a whole village in Italy or in Spain. You just have to rebuild it. That is your cost. But basically, you can get the title to these villages or houses in villages. In Switzerland, we have mountain villages where you can get the house free of charge, but you will have to then rebuild it and so forth. So there's some obligation. But basically, what I want to say is that real estate in the countryside in Europe is incredibly depressed because nobody wants to live there anymore. I think, incidentally, that this may offer a good investment opportunity. Because in the modern world, you don't need to be in a financial center or so. You could work from your home through the internet. So that may be a lifeline to these empty villages. But then you have real estate that is still relatively high. And we also have to look at real estate in terms of cost of maintenance. I mean, I happen to be interested to read about some of the mansions that are being sold. And I subscribe to a service that has luxury mansions. I'm not interested to buy one, but I'm interested to see a bit the prices at which they are sold. Partly because a friend of mine, he had a very large property in New Hampshire, and he thought he could sell the property a few years ago for like $50 million. And they probably got the land very cheap, but they maintained it very well. And they built about 5 houses on that huge property. And they had 12 gardeners looking after the estate, the garden, and so forth. At the end, they sold it, I think, for about $16 million. But they thought at the beginning it was worth $50 because New Hampshire has high property taxes, and this is such a huge property. It's not easy to maintain. And I looked at some of the properties that were recently sold in New Jersey by songwriters and singers and celebrities, in short. And they were all at relatively low prices because taxes are high and the maintenance is expensive. And the weather is not particularly good in winter time. And ditto in Hollywood, Beverly Hills, all these huge mansions, the young people, the millennials are not interested to live in them.
Is President Trump managing to put the brakes on the spread of communism and socialism around the world?
I am not sure. He is retarding it. But maybe because he's retarding it, it will come back with more vengeance after Trump goes, at latest in 2024.
Is President Trump right in backing Hong Kong democracy?
Well, I think that compared to his predecessors, Obama and the Bush family and the Clintons, he has been actually, and I'm emphasizing here, relative. He has been a relatively decent and honest president because everybody watches his fingers. He can't really move very much. The media is 100% against him with the exception of Fox News, but the other media is very, very biased and has been protecting democratic politicians like the Bidens and so forth, that where it's very well known that there was some quid pro quo in the case of his son Hunter, who got contracts with the Chinese and a directorship with his Ukrainian company and so forth.
We'll have more with Dr. Marc Faber right after the break.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Dr. Marc Faber. Marc, what is the U.S.-China trade war doing to the economies of China, Hong Kong, and surrounding Asian countries?
It's a mixed bag. Definitely, in the near term, it's not positive for China. But China had to wake up to the fact that they have to become 100% independent from the U.S., that the U.S. is not a reliable trading partner, and that the U.S. has initiated some kind of a Cold War against China. And I'm saying this without giving a judgment rightly or falsely. The only thing I can say in this context is to accuse China of property theft is probably correct, but the U.S. has committed massive property right theft in the 19th century and the beginning of the 20th century, so the U.S. is not the one to complain. And China has stolen properties, intellectual properties undoubtedly, so have the Koreans, the Taiwanese, the Japanese, and everybody else in the world, including the Americans. Now, the Chinese, in the meantime, they have maybe close to 4 million science, mathematics, and physics and engineering students, higher degree students per year that graduate. In the U.S., it's about 500,000. So you can see that they have a lot of qualified people, and nowadays their technology and sciences are about as advanced as any other country in the world. In some sectors they still lag, but because of the trade war, they're now catching up very quickly. And the trade war has damaged, say, certain companies like Huawei, but Huawei is miles ahead in 5G technology compared to European and American companies. So I think the damage will not be that huge. And the other Asian countries, Hong Kong has suffered not because of the trade war, but because of the demonstrations. And other Asian countries, some have benefited from the trade war, as some production was shifted from China to Vietnam and Bangladesh and so forth. So it's a mixed bag.
How much money is China allowed to print each year?
Well, I don't know the precise figure. They obviously also print. The balance sheet of the Bank of China is also expanding. But I think that China is quite serious about adjusting the economy and correcting some of the previous excesses. Whether they manage to do it without a serious recession remains to be seen. But the abuses that occurred in the last few years, some of them have been corrected.
How do politicians get rich while in office on a politician's salary?
Well, look, I think if we look at government expenditures around the world, the larger the government expenditures are, the more there tends to be corruption. Now, in very honest countries, like the Nordic countries, Sweden, Finland, Denmark, Norway, and then to some extent Switzerland, I would expect that corruption is around 5 to 10% of government expenditures. These are the honest countries. Then you have the most dishonest countries on the other side of the scale are all in Africa. There, of the government expenditures, maybe 80% is stolen. And then you have other countries that are somewhere in the middle, where between 20 and 30% of government expenditures are being stolen. Let's assume the U.S. has a budget annually of $4.3 trillion. That's the government expenditures on the federal level of the U.S. for defense, for social security, for health care, and so forth. And let us assume that they're honest and only steal 10% of the $4 trillion. We're talking about $400 billion that flow into the pockets of politicians. And if they're extremely honest, then it's only $200 billion that flows into the pockets of politicians. But they would have to be extremely honest. And as we know, Washington is not extremely honest. So I think that there is a reason some people want to become politicians. There's big money in politics.
Is a light being shone on political corruption around the world, and could this affect stock markets, commodity markets, and currency markets?
I think there is people talk about the deep state. What is the deep state? A president, he becomes in America president for 4 years, and assuming he doesn't do a disastrous job, and assuming there are no accidents, he will be president for 8 years. You understand? So, in a lifetime of someone, a president is president. Let's say the average life expectancy is about 78 years or 80 years. He's president for maximum 10% of his life. The bureaucracy can be in Washington for 50 years or so. You understand? And that then becomes a state within a state. And then there are sub-states within that state, the CIA, the FBI, the IRS, and so forth and so on. And the president is only there for 8 years. He can try to change certain things, but he will never succeed. The deep state, the entrenched bureaucracy is so powerful, and it essentially cooperates with each other and protects each other. So if the president attacks someone, the others will immediately protect the person who has been in Washington for a long time. So it's very difficult to get any convictions, as we see nowadays. And it's not the people that are Republicans against Democrats and so on. But eventually it will be the people against the state.
We're hearing rumors that Canada is and has been sold off to China by Canadian politicians. What are you hearing?
That I have not heard. But clearly, the U.S. is having influence in most elections around the world. Or so-called charitable institutions or NGOs that are receiving large contributions by the government. They have influence on the elections around the world. And the Chinese, they do the same, and the Russians do the same, and presumably, probably the European countries do it less. But nevertheless, it's quite common for countries to have lobbies and to pay off some people to try to get a good deal for them.
Have you put your deposit down yet for Tesla's new Cybertruck?
I'm not so interested in electric cars. Maybe one day I will be, but I don't drive cars. I drive motorcycles. I know how to drive cars, and my wife drives cars, but I prefer to drive motorcycles. I have Ducati and Suzuki and Kawasaki, all above 1,000 cc. And this is my favorite mode of transportation, or in a car with a driver.
Overall, do you see gloom, boom, or doom ahead for the new year for the world?
Well, I think we'll have both for people who are well positioned in asset markets. I suppose in precious metals there will be some sunshine, and I think otherwise equity markets are on the high side. And as you know, in fixed interest, you hardly earn anything. And I also believe volatility will increase. And, there could be significant downside volatility. So my recommendation is to have an unusually large position in cash. As you know, my asset allocation is 25% equities, 25% bonds and cash, and 25% precious metals and 25% real estate. I think you can take off some money from bonds and equities and build up your cash position to maybe overall 20% of the portfolio.
What do you think your big headline for 2020 will be?
That I don't know, but I think it's not unlikely that there will be a recession, and actually that inflation, what people call inflation, I mean consumer price inflation, that this will take off because food prices are very low and they're likely to go up, and wages are going up, and as the dollar weakens, I think this will lead to some inflationary pressures. So maybe we'll have a situation where they should tighten monetary policies, but because of a weak economy, they won't do it.
Can you tell us about the Gloom, Boom, and Doom report and how people can find out more about it?
Well, I have a website, gloomboomdoom.com. I repeat, gloomboomdoom.com. I have two reports, a website report monthly and a printed report, which is the Gloom, Boom, and Doom report that is sent out by mail.
Mark, thank you so much for being on This Week in Money.
Well, thank you very much for having me, and I wish your listener and you Merry Christmas and a Happy New Year.
And the same for you and your family, Mark.
Thank you very much.
My guest has been Dr. Marc Faber, editor and publisher of the Gloom, Boom, and Doom report online at gloomboomdoom.com. He was speaking to us from Chiang Mai, Thailand. Coming up, Eric Haddock, next on This Week in Money.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Eric Haddock, CEO and President of InsideTrackTrading.com. Welcome back to the show, Eric.
Oh, well, thanks for having me back, Jim.
Eric, we're hearing the Dow is close to topping, but we also hear it could go to 40 or 50,000. What do you see ahead for the Dow in 2020?
Well, I'd have to say I'm not quite as optimistic in the foreseeable future. What I've been describing on first of all, on like a 1 to 2 month basis is the month of November and this convergence of weekly cycles in late November. Were all warning me to look for a top in here, and a top that could hold for at least a couple months and perhaps morph into something bigger than that. So I think that the equity markets are definitely at an inflection point, and I think that, here we have all these cycles that are converging in, like I said, late November. You've got a very consistent 11-month cycle, which breaks down to about 47, 48 weeks in the New York Stock Exchange Index, and that came back into play on November 25th to the 29th. The NASDAQ 100 has an overlapping convergence of cycles. They're a little bit different in origin, but they also converge during that final week in November. And as is often the case, the Dow Transports led the turnaround. I was looking for a preliminary peak in that index in early November. They gave it to me. They sold off even on short-term basis. The transports were just very closely adhering to daily cycles that looked for a drop into November 21st, 22nd, then a rebound into the 26th or 27th, and then a second larger sell-off from there that could stretch into the latter part of December. So that's what's, from a cyclic basis, is what's been unfolding, and there's been some of my strongest or most reliable technical indicators corroborating that too. And the interesting thing to me is that there are certainly some potential fundamentals that could work along with that too. The biggest one being the trade war between the U.S. and China. And barring a complete positive surprise, I think that the markets and most of your astute observers have concluded that, okay, we'll get some sort of phase one deal, hopefully get a delay or a suspension of the December 15th tariffs that were supposed to go into effect or increase. But unlikely you're going to see a whole lot more right now. And if that's the case, then that's telling you it's already priced, all the positives already priced into the market. So you have people saying, okay, so wait till December 15th. Well, it's, very classic that you get a buy the expectation, sell the realization, or buy the rumor, sell the fact with events like that, that again, the positive part of that is already factored into the markets. So now any of your surprises are far more likely to be to the downside.
Are gold and silver in a 40-year cycle?
Absolutely, yes. And that's something I've talked about for over a decade, really. In fact, I have some archived reports on my InsideTrackTrading.com website called Date with Destiny that described in 2010-2011 how gold was coming into what I thought would be a 5 to 10 year peak in late 2011. And one of the things, among many, but one of the real noteworthy things I saw was that August, September of 2011 would be an exact 40-year anniversary of the Nixon gold shock of August 1971, and that really was one of the watershed events in gold's history, gold and the dollar's history. and sure enough, gold peaked set its highest monthly close in August of 2011, exactly 40 years later, and spiked a little bit higher and sold off from there in September of 2011. But there's also a consistent, what I've called currency war, and by that I mean a battle between fiat currency and hard currency that has recurred and been resurrected every 40 years, going back to the beginning of the U.S. in the 1770s to the early 1780s, but even dates back to the mid-1200s when you look at gold in Europe and pieces of eight and other historical aspects of gold and its use or its rejection as currency. And so again, that 40-year cycle has just played out over and over again. In the 1850s into early 1860, you had the suspension of gold after the government actually started reducing the amount of silver in coins, and so first you had a suspension of silver, then gold. 40 years later, you had the move back towards the gold standard, the notorious election of 1896, and the Cross of Gold speech, everything that dealt with that, and it led to a return to the gold standard in 1900. Then you had 40 years later in the 1930s the suspension and basically making it illegal to hold gold and silver. Then in the 1970s you had the gold shock, followed by the Jamaica Accord, which I refer to as not just the dollar, but the global currency's divorce decree from gold, and that was signed in 1976, and I was discussing with gold on a longer-term basis after we saw that major top in 2011 that I thought we would see a 5 to 10 year bottom in late 2015, and that 2016 would be what I dubbed the first golden year of a resumption of gold's uptrend, and that again was exactly 40 years from the time when the global central bankers signed the divorce decree from gold, and that the ramifications play out for things like that both in the immediate aftermath and then on a longer-term cyclic basis. And so we're into that phase where from 2016 into 2020, possibly carrying over into 2021, that I thought you'd see gold moving to the upside. And so again, just to answer your question, there is very definitely a 40-year cycle, and it impacts not only gold, but the entire battle of currency and of fiat versus hard currency.
Do the 40, 70, and 80-year cycles ever converge?
They certainly do. And the late 2010s is one of those times when I have talked about this collision of these major generational cycles carrying over into the early 2020s. Actually, very recently, you've seen some focus on one aspect of that I've talked about. And where the 70-year cycle is concerned, the recent celebration of NATO's 70th anniversary, at the same time, kind of culminating a couple of years of the U.S. administration really kind of bashing NATO and its effectiveness, and then most recently Macron, and I think the Austrian Prime Minister came out and kind of validated what Macron said about NATO being brain dead. And the 70-year cycle is something that I term it the cycle of kings and the cycle of governments. And so these, whether they be a true governing body or an NGO, it's a time of political influence that often shifts on that 70-year cycle. and the late 1940s were a preponderance of global, now more Western-oriented, but global unifying bodies triggered from not just NATO, but World Bank, and I think the World Council of Churches is even in there. And if you just look at the late 40s and start listing all of the kind of global unifying bodies that came in, that 70-year cycle reaches fruition in 2018, 2019, 2020, and it's when, from a larger standpoint, I think we see a big shift. But that type of thing plays out in economically and financially, plays out geopolitically. You know, when you're talking about the World Bank and ultimately the IMF, here you are coming 70 years later, and you've got the BRICS New Development Bank and Shanghai, the Asian Infrastructure Investment Bank. I think it's based in Shanghai or Beijing. One of them's in one city and one's in the other. But they've been on the slow upswing and looking to vie with the Western-led banking infrastructure, and if there's ever a time for a shift or a transition to begin to take hold, it's right now. And so you've got, the 40-year cycle I was just talking about, the Western world's, the Western banking's divorce from gold, and you've got this 70-year cycle coming into play that also deals with economics, banking, finances, and then an 80-year cycle which really has as much to do with war as much as anything. I know we've talked about that before, but that comes into play in the early 2020s, and most wars are fought for economic reasons. So if you've got financial, economic, and geopolitical cycles, generational cycles, all entering a period where you expect a shift, maybe a seismic shift, then war cycles certainly fit right in with that whole scenario as well.
We'll have more with Eric Haddock when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Eric Haddock. Eric, there's a lot of talk about the growing electric vehicle market. What do you see ahead for lithium and cobalt, which is needed for their batteries?
Well, I definitely think you'll see demand continue to increase where they're concerned, but I don't follow them that closely. So you might look at the inverse, the flip side of that equation, and what does that mean for fossil fuels, for crude, for the energy market, and cycles in crude continue to show that we've not seen a complete bottom yet. That I think that that fossil fuels are going to remain under pressure with those periodic spikes when you get, whether it be Middle East tension, or even coming into OPEC meetings right now, you get those spike ups on alleged production cuts until the market finds out exactly how much cheating's going on and how much production is then filled in by other producers, even American shale producers. So I think that you see oil stay under pressure at least until some key monthly cycles come into play. And with something like the electric vehicle market, you're going to have fits and starts. You're going to have these spurts and spikes up in demand, and then all of a sudden plateaus. So that's also one of those shifts that plays out over a longer period of time.
What's your take on interest rates?
I think that interest rates are set for a. Let me step back and go where I've been looking at bonds and notes, which trade at the inverse of the actual interest rates. And the bonds and notes markets, 30-year bonds, 10-year notes are the futures that I watch the closest. They had several indicators and cycles looking for a correction in late August to early November. Interestingly enough, it was almost a replay of what was seen in 2018, where those markets sold off into early November and then began about an 8-month advance from there. I'm actually looking for something similar. It'll have its distinctions. History rhymes; it doesn't repeat. But I do think that bonds and notes are going to try and make one more rally into mid-2020. There's a lot of very intriguing cycles coming into play in June, July of next year. A 4-year cycle that's been very consistent in bonds and notes. So from that perspective, that would tell you that at least the perception of interest rates is that leans towards some more loosening of credit leading into that, but I think that that's a major turning point at that point in mid-2020, and that from that point forward, you'll see the bond market selling off, and therefore the correlated expectation of longer-term rates starting to bump up, and that could be something related to price inflation, that could be related to currency issues. There could be a lot of things in addition to the normal strong economy, weak economy justification.
The U.S. dollar, how's it going to deal with the interest rates?
Well, I think the dollar's been stuck in a multi-year trading range and is going to stay there for some additional time. I'm looking for a sell-off in December, and then kind of a recovery from there. But then, depending on what takes hold in the first quarter of next year, the dollar could be set for a little bit bigger sell-off from second quarter on in 2020. And again, maybe that's something that also plays a role in interest rates. If I'm even close to accurate and we see U.S. interest rates trending a little bit lower over the next 3 to 6 months, that could start to impact the dollar negatively, particularly if any competitive nations start to see some recovery and maybe start to bottom out. They've been so far ahead ahead of the U.S. as far as lowering interest rates, and their economy's weakening faster and taking deeper sell-offs there. But maybe you start to see some of that shift a little bit and impact the dollar as well. But right now on the horizon, it's more a trading range for the dollar until we pass some more significant cycles about a year from now.
Cryptocurrencies, the outlook for, say, Bitcoin.
Well, Bitcoin has been trading on some pretty consistent 1 and 2 month cycles, and I was looking for an initial low in late October, and depending on what the bounce from there did, it could see a final dip into late December. That still is my expectation. could drop down as low as the $5,800 to $6,200 range, but there again, that's going to depend on price action really of the next week and some indicators I'm watching. But I think that should put a bottom under the market. Of course, I think we've talked about this before too, but in the whole cryptocurrency arena, I certainly expect that to continue to build a base and move upward, but there's no guarantee Bitcoin is going to be the one leading the next round of that. You even listen to the murmurings and some of the observations where China is concerned and trying to or considering integrating more of a government-controlled crypto, and you may see things shifting in that direction in the years to come. Where who's to say what that does where Bitcoin's concerned specifically, but the cryptocurrency arena, I think, is going to see a new upswing in 2020.
Eric, anything else you'd like to add to today's show?
The only thing that I would mention is when we were talking about the stock market and its broader cycles, I think that in that context, we've also entered a period starting in late November where it could be a very precarious time in stocks. I'm looking for an initial 2 to 4 week sell-off, but depending on whether one specific indicator, my weekly trend indicator, if that turns down by the end of December, it could be a harbinger of a bit deeper correction in the markets. And I mentioned that you've got the trade issue perhaps being a buy the rumor, sell the news, but it's interesting to me too when you see other issues starting to come out where even I think it was an article I read from I think it was Ned Davis Research just in the last few days showing that almost every significant stock market top of the last 120 years has ended with a blow-off that's lasted roughly 2 to 3 months, and I think the percentage is somewhere around a 15% advance, which is exactly what the Dow just did from late August into late November. So you've got these other anecdotal issues that are starting to corroborate the cycles and the indicators that are signaling a top to me. So that just tells me to look for additional corroboration that this could be a more significant downturn in the markets. And there's even an interesting waves setup that I discussed in my December Inside Track. And that's something I'd be happy to send your listeners if they email us and ask for a copy. But dealing with the New York Stock Exchange Index and just the whole wave structure of that and what that could mean for the next 3 to 6 months. So I just think that not only from a broad base are we kind of at a very significant juncture, but also from an intermediate standpoint, we're entering a period that could be precarious for equities.
Eric, can you tell us a little bit about InsideTrackTrading.com?
Well, we provide technical analysis, primarily technicals. I'll certainly tie in some of the fundamental analysis, but technical and cyclical analysis on all of the primary financial markets and stock indexes. And we have weekly and intra-week service, also a monthly and intra-month service, and quite a few special reports and interim articles that deal with some of these more isolated or significant events in the markets. All of that you can certainly visit our website at InsideTrackTrading.com with that extra I in the middle of inside, INSIIDE, InsideTrackTrading.com. But also if you want to see some of the recent short-term articles, we post an ongoing progression of them at 40yearcycle.com, particularly those that corroborate and correlate to the 40-year cycles that I've been talking about. So that's another place that you can view more of the work that we produce and get an idea for whether it's something that would fit with your listeners' approach to trading.
Eric, thank you so much for being on This Week in Money.
Thanks for having me again, Jim.
My guest has been Eric Haddock, CEO and president of InsideTrackTrading.com. He was speaking to us from the Chicago area. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Dr. Marc Faber, and Eric Haddock, and thank you for listening. If you have any questions for our guests or for the show, you can send them to info@howstreet.com. Now stand by for company showcase updates from American Manganese CTO Zarko Meseldzija and Cypress Development Corporate Consultant Don Mosher. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. Usually we'd be talking to American Manganese CEO and President Larry Ray. Larry's under the weather a little bit here. So we have company CTO Zarko Meseldzija filling in for Larry. Welcome to the show, Zarko.
Thank you for having me, Jim.
Zarko, a very busy year for American Manganese. Can you give us a bit of a rundown?
Yeah, this will be my first time on the podcast, and I decided to do a little year in review as we've had a pretty busy 2019. So I also wanted to do this because I know, throughout the year we've gained a lot of new investors, a lot of people looking at the company's newest developments, but really catch everybody up on what happened up until now. So just with the pilot plant achievements, really all started in January when the pilot plant arrived to the Commetco facility, and we commenced the testing of cathode scrap material. From there, the pilot plant was in stages, so 1 through 5, and we did an approach where it was stage by stage. We collected data, really tried to optimize on each part of the process. And with the first results that came out pretty quickly was on the extraction. So those are the first 2 stages, and what those are focused on is extracting the active cathode material from the aluminum substrate. So, for instance, we tested NMC and NCA cathode material, and some of the results that we announced for the NMC in particular, we got up to 93.6% recovery on the lithium, 94.8% on the cobalt, nickel was 91.3%, and manganese was 96.4%. And these were great initial results, and also the company has realized, where can we optimize and where can we improve, and this has continued on. And then going forward a little bit in stages 3 and 4, which really focus on purity and the precipitation of the materials. Again, for the NMC, first we had 99.88% purity of that cathode material, and then we slowly improved on that and realized where we can make some corrections, and we reported 99.93. And then shortly after that as well, with the NCA cathode material, we reported 99.94, which is, great results for the company and really positive overall. And just in September, with stage 5 testing that we completed, unfortunately, because of the patentable information, we won't be able to disclose much, but we're really happy with those results and really happy to see how all those stages came together from January to September. And, our battery recycling process has gained lots of traction throughout the year. So throughout that process, we've had a lot of visitors, a lot of NDAs, like Larry always mentions. And from there as well, when we finished the pilot plant testing, we received some material from some third parties, and we began testing on that as well. And those are the most recent results where we achieved achieved 99.98% purity and 99.977% purity. Now this material, now that it's recovered, will be going back to those third parties for further analysis. There'll be some back and forth. A lot more that goes into that now on their end and on our end. So as more material comes in and results, we'll be reporting on that. But now, outside from the pilot plant throughout the year, we really had some exciting stuff go on as well. For instance, we partnered with the U.S. Department of Energy, and that was on a project focused on creating a complete solution to promote a circular economy. In addition to that, we were granted our patent, so that was 13 months after the filing, and we've applied for the national phase applications in 7 countries. We were also granted the second patent, and that was actually within 12 weeks from the date of filing. And on top of all of that, we've also introduced the Recyclico patent process, which many of you may be familiar with now. I know there's a lot of investors asking, when will there be a name change, and the company saw this as the best approach of branding the recycling portion, or what we call the urban mining portion of the company's technology. As Recyclico, there's a lot more complications, and it's not as easy as it is to change the name of a public company. And there's a lot, we still have our mining assets and everything. So, but Recyclico really encompasses the lithium-ion battery recycling portion. Also, just a few months ago, I also attended the Canada's Battery Initiative in Toronto, and it was great to see Canada getting in the game for the battery value chain. So the event was organized by Natural Resources of Canada, and it's just really exciting to see all the different companies, provinces, territories taking part and realizing that there's a huge opportunity here and there's a shifting landscape. And going forward now, I mean, this is just like a quick overview and summary of everything that has gone over in 2019. But now everybody's wondering what's going to happen now. The pilot plant, the testing is done. We've gotten great results with some of this third-party material. There's what's going to happen next, and it brings the attention back now to as well our partners at the DOE and our MOU that we signed with Battery Safety Solutions, because again this is a second look into the end-of-life solution. Because with the pilot plant, we've been focusing a lot on cathode scrap and the manufacturing waste from, cathode manufacturing. But now with the end-of-life, what happens, to a full EV battery? And that's where, groups like Battery Safety Solutions and the DOE have come in and are working on really unique disassembly and discharging methods, and they've been sending us that material as well. Actually, it's just about a year that we signed that MOU with Battery Safety Solutions, and throughout that year as well, they've sent us multiple revisions of disassembled batteries, and we've gone through and tested those, and there's a lot coming in that aspect as well, and I think the company will be reporting on that as well as it comes in, and we've discussed with Cometco kind of an action plan and what the deliverables are and what our priorities are. And one of those as well as the latest press release was the preliminary engineering design and economic analysis for our 3-ton per day commercial demonstration plant. And this commercial demonstration plant is going to be focusing on the cathode scrap, and I think really at this point a lot of parties have come to visit the lab at Cometco and see the pilot plant and signed NDAs, are getting interested in the scale up of this process, and I think we have to start now in 2020 looking at these numbers and the engineering design, and I think that's one of the company's main focuses going forward. And if it's as successful as the year of 2019, things are going to be looking really good in 2020.
Zarko, where are you traded and under what symbols?
So we're traded in the Toronto Venture Exchange under AMY. We're traded in the U.S. under AMYZF. And we're traded on the Frankfurt Stock Exchange under 2AM.
And if people wanted more information about American Manganese, where should they go?
So you can go to our website, AmericanManganeseInc.com. You can also go to our other website, Recyclico.com. that focuses on the lithium-ion battery recycling technology. And you can email Larry at LREAUGH@AMYMN.com. Or you can also email me. I guess I'll leave my email and that's Zarko at AMYMN.com. So ZARKO. And you can call the office at 778-574-4444.
Zarko, thank you so much for the update, and I hope Larry gets well soon.
Thank you. Have a good weekend.
My guest has been Zarko Meseldzija. He's the CTO at American Manganese. I'm Jim Goddard. Our conversation took place on December 6th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Don Mosher. He's the corporate consultant for Cypress Development. Welcome back to the show, Don.
Pleasure as always, Jim. Thanks for having me.
Don, where is Cypress at with its PFS?
Our prefeasibility study is right in the finishing stages. We expect to have it out early in January. The whole front end of the mining flow sheet is all done, all the way from taking the clay stone out, putting it through the leach process, removing the solids, and ending up with the solution. We're in the critical stage right now of basically doing a bench-level pilot plant in the NORAM engineering facility here in Vancouver. And why that's critical is the end product. The lithium space is very misunderstood. I mean, lithium has a number of uses. It's used for lubricants, it's used for glass and ceramics, it's used by the pharmaceutical industry, and they're very different from the quality of lithium needed for battery grade. So you actually have quite a spread in pricing between the lithiums that are a lower grade lithium that can be used for those alternative uses as opposed to what you're using for battery grade. It's like a $3,000 or $4,000 a ton differential. So when we take our solution and run it through this bench level pilot project, if we can produce a battery grade lithium hydroxide, it's going to have a very positive impact on what our economics look like.
You were mentioning, production and demand is way up, but prices have come down. What's the split, and why the difference?
The problem is lithium is not a global market. It doesn't trade like copper, and it's very different than gold and silver. I mean, when you're talking quality. And as a result of it not being traded globally, a lot of the stuff is traded on contract prices. And right now there was a lot of talk about an oversupply of lithium. Morgan Stanley put out a piece on it. It was contradicted by Eric Zoncharb at Canaccord. When Canaccord looked at it, they looked at it not from the fact of what's projected to be coming on stream, but Eric went back and took a look at what actually has happened over the last 5 years and how much of that projected supply came on stream. And there's a lot of projects out, like there's a spodumene project, Nemaska in Quebec, that's run into financial problems. And who knows when that project's going to come on. So last year there were 52 mega factories in the pipeline. This year there's 103 in the pipeline. The lithium index is down 12%, but the demand is up 18%, and everybody in the industry is depressed. How many industries can you think of out there that have an 18% growth and they're depressed? The other thing is all these brine projects. Emily Hirsch was being interviewed on it. Emily Hirsch is Argentinian. And she's taken a look at the instability in Bolivia, Chile, even her own country of Argentina. And the brine evaporation projects there not only are under a lot of pressure because of the water use, and the indigenous population's getting upset that they're not going to have access to water, but in addition to that, when's the last time a brine mine came on as far as production goes? So because it's a relatively new industry, meaning that in the past it was very stable, there was set amount of usage for all those traditional applications, and now we're seeing almost a new industrial age being born, where they're projecting by 2030 they're going to be producing 38 million cars a year. And there's billions of dollars being invested by Volkswagen, BMW, Tesla, of course, is all electric cars. You're going to see a lot of ups and downs in the industry. And what we've got is basically a new technology going into a new industry with these claystone mines that we're looking at coming forward with production on. And it's probably a great opportunity to be buying in the lithium sector because it is so depressed currently with very little money being invested into bringing on new production.
Don, your production's in Nevada, isn't it?
Our production that we're working on developing right now will be in Clayton Valley, Nevada, which is a great situation, very stable domestically. The U.S. is going to need to go to work. Like out of the 103 mega factories coming on or in the pipeline, 72 are in China, 14 are in Europe, and there's only 5 planned for the U.S. The U.S. is falling so far behind. Like China's out front and center. Europe is trying to catch up. Nobody even talks about Japan and Korea and the amount they're using there. But I think if we can come out with battery-grade production in a claystone in Nevada, this project is going to be highly valued by the industry.
And, of course, yours is a high-quality product, isn't it?
We need to prove that yet, Jim. That's this last piece of the pre-feasibility that's being done in the engineering labs right now.
When do you expect to go into production, and how will that mesh up with the demand for high-quality lithium batteries?
Realistically, if we started the process in January, you're going to be looking at about a 2-year process for all the permitting, and then you're probably going to be looking at another 2 years for the construction build-out to actually being in production. I really don't see Cypress taking this all the way. I think this is going to be a situation that ultimately is bought by a much bigger player. We just need to get it through the pre-feasibility, and I think that will put the project into play.
Now, 4 years out from now, you can see places like China and India, which suffer from very poor quality of air because of their car use. By that period, there will be mandated use of electric cars, won't there?
That appears to be the way everything's going with all the climate change talk out there. I mean, the UN has called it a climate crisis. They're pushing for everybody to start to pull up their socks and achieve the goal set by the Paris climate talks. And a lot of work needs to be done if they're going to go that way. And right now, if you take a look at 2020 projections on lithium use for battery grade, it's about 315,000 tons. They're projecting by 2025 it's got to be 800,000 to 1 million tons. We're not even close to seeing that kind of production coming out anywhere in the world. That's why I'm saying you're going to see some peaks and valleys in the price of the lithium. There's no way there's an oversupply on this. If we go to 1 million tons of lithium demand, I don't know where it's going to come from. You're going to have to see a lot of capital investment into projects.
Don, for people who may not be familiar with Cypress, what are you guys all about?
We're a development company in the lithium space. We trade on the Toronto Venture Exchange under the symbol CYP. We also trade on the OTC down in the U.S. under CYDVF and in Frankfurt as C1Z1. All our information is available on site at cypressdevelopmentcorp.com. They can see all the studies and everything else there, and look forward to us releasing our pre-feasibility study in January.
Don, thank you so much for the update.
My pleasure, Jim.
My guest has been Don Mosher, corporate consultant for Cypress Development. I'm Jim Goddard. Our conversation took place on December 4th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of How Street Media Incorporated.